If you have ever heard someone say it's investing in the stock market and you thought to yourself, is that safe? Then this video is for you. And you think about the possibility in investing in diverse stocks or in diverse companies at the same time, you might want to listen to this video. Welcome to another day of our money mastery class. In this lesson, we'll be looking at two major topics, looking at the bond and the stock market. Then we'll be looking at the mutual funds and ETF, that is exchange traded funds. When we talk about stocks, how do we mean? Stocks is like having a slice of a company. Stocks relates to ownership. That is, you own a portion or a slice of that company. So if that company grows, your investment grows, or there's a loss in the value of that company, so also the way your stocks lost value. Now, let's look at bonds. Bonds is like lending out money. So if you bought into the bond issue of any company, it means that you gave your money to that company to use. And the time you lend that money to them, for that time, they are going to pay you what we call interest. So bonds relates to like lending out, lending your money to a company. So it could be a government, it could be a company. The difference between stocks and bond is this. Stocks is volatile. That is, stocks move up and down the ladder, right? It's never stable. Just like what's going on around the world, talking about the market going down, people losing money. That's what it is. It's never stable. There might be a time that it's going to come down. There might be a time that it's going to increase. Then people make money from the stock market. Exactly, that is what it is. So it's never a stable market. And you can have high return in the stock market compared to bond market. In bond market, it's very stable, but the return is lower. It's stable, but the return is lower. Just imagine giving someone your money to use for a fixed interest, for a fixed percentage interest, is a stable investment. Okay, so that is the difference between investing in stocks and investing in bonds market. Now, what are the risks there? The risk there is one of those things I've mentioned during the explanation. The risk there is that in the time of crash, when the market goes down, you lose money. That's one of the disadvantages of investing in stock market. But it could also go up tremendously, that you gain a whole lot